I like to watch that divergence in terms of not as many net lows. But ultimately, what I like about the net highs and lows tool and why I use it and why I created it this way was that, for example, on the advanced decline line, there can be a divergence that lasts a long time, but price doesn't break down. So even if there is, so I find that an ineffective method for analysis. So if you can see a higher low, you have this divergence, which is an improvement. I mean, we're breaking lower in price and you're not making as many lows, which means internally that is healthy. In fact, the weakest point internally was way back here on September 26th, 23rd, despite the market going lower. This is where you had most stocks break the new lows. But what I like about the net highs and net lows, even if the number of stocks breaking down diminishes, we won't get a positive number until some stocks are actually showing that they're making new 52-week highs. And that's an important hurdle to cross, because you can have stuff like, for example, Celsius chop sideways, back and forth, back and forth, back and forth. And you're gonna have days where it's an up day, but an up day is not the same like investors willing to pay higher prices than any other time for the past 52 weeks. That's really net accumulation. Someone's paying new 52-week high. So this indicator, in its simplicity, can show that divergence, but also by waiting for those actual new net highs, you need to also then have that internal net progress, which we haven't seen yet. So that's what I mean by a significant low. So the significant low is a point where most stocks will bottom. So you can see, for example, well, this is an obvious point here, but this was a really significant low here, even though we've kind of retested. Sorry, this is the Celsius. So you can see here, for example, May was a very significant low internally, even though we kind of pushed lower. And so that is same here. We had this big reversal bar. So we hit fairly deep lows, near the deepest number of net lows of this move down. So it's not just any other drop along the way. So for example, you can see here as we're kind of breaking lower, these are all kind of moving lower in succession, but there's no climactic point. So whenever you have those days where this really spikes, that means like every stock breaks down. And when you get those very high correlations, that's usually a point of panic short term. So it makes it a more significant point in the trend. I hope that explains it a little bit better.